All right, hello everyone. I'm going to go ahead and talk about my $7,000 Robinhood portfolio. As you can see, this was a terrible, terrible day. I did not do good. At one point, I was down about minus $145, but the market started to come back up, and we're not going to waste any time. We're just going to jump right on in. As you can see, I did get paid a dividend today from Boeing Airlines, one of my favorite stocks in the portfolio, but we're going to jump right into this portfolio. We're going to start off with my healthcare sector, AbbVie, and I have about 5 shares of this stock, and they have not been doing super hot lately. I think I bought this high, actually. I bought this extremely high right around here, and this thing kept tanking down, which to me, that's fine. That's just fine, because I plan on buying and holding AbbVie. I think that they are a great company, a great biopharmaceutical company. They've actually raised their dividend lately, and as you can see, I've been getting their dividends, which is quite great for me, because that's why I like to focus on. Growth and dividends is what it's all about. And when the markets do this, when the markets go down, that's what I like to be in the most. I think that growth and dividends are the primary focus to my portfolio. So if you're watching this video, that's what I'm all about when it comes to the stock market and investing: growth and dividends. And I am going to get paid these dividends if I hold on to these stocks and get the tax advantages that I am looking for. But as you can see, I am quite down on Boeing. And my total return is in the negative, $20. But like I said, this is a long-term hold, and that is perfectly fine with me. And I know that AbbVie is going to go right back up. So we're going to jump out of AbbVie and we're going to go to Pfizer here. And a blue chip stock. This is a blue chip stock. I have 15 shares. 15 shares of this stock. I'm going all in on Pfizer. I think that they are a solid blue chip healthcare stock together with AbbVie. They're going to pay me handsomely if I just hold on to them. They have great growth in this little 5-year chart here, and I just think that they're just going to be trending up, because healthcare is a favorite sector of mine. And I think that this is when the sky is falling and stocks are going down and the market's crashing, these are the stocks that people want to hold on to. When when the sky is falling, people want to get out. They want to get out of stocks that don't pay dividends. There's nothing holding that stock up. For example, T-Mobile. I think T-Mobile, they don't pay any dividends. Let me just pull them up here just right quick. I think it's T-Must, ticker symbol. Hold on, I just got to put the T there. There he is, T. Yeah, so when the sky is falling and the markets are crashing, they don't pay a dividend. Great market cap, no dividend. When the markets are crashing, look at this, a straight line. Oh, that was a real straight line down. They've been kind of going up, but the whole market in general has been really tanking. It's not just just T-Mobile and all this other stocks, but the market itself has been really bad. It's been very volatile. That's why I'm in these high paying and high growth dividend stocks, paying stocks, because I just think that they are the best things to hold on to during a correction or a crash. The next sector that we're going to jump into is my tech sector. Apple. I'm doing very, very well on Apple. I jumped in right on their dip from the last correction. I think it was sometime around early February. I think this thing got down to about 154. I bought it at 159, and it's just been on a tear as of late. I wish I would have got it at this little point right here, but at 159, 3 shares, I'll take it. And I'm a $51 return. That's great. They do pay a dividend, even though it's not the best dividend. This is a buy and hold blue chip stock. I've been getting their dividends for a while now. You do not sell Apple at all. You buy it and you leave it alone. Don't touch it. Let's keep going down in my portfolio. As you see, I have Microsoft. A lot of these stocks, as you can see, I have quite the position on these stocks. I don't just like buying one stock at a time. I like buying multiple shares, because it gives me more of a return. It gives me more of a dividend strategy. But I kind of bought Microsoft high. I wish I would have. I actually got into Microsoft earlier on. It's the same with AbbVie. I think I've got in about $90, and I traded it out for I sold it high for about $98. But as you can see, Microsoft, great dividend, a little higher PE ratio. I'm not too worried about that because if you look at their 5-year graph charts, they do not dip at all. They had a little pullback right here though, but the whole market pulled back, so that's fine. But again, Microsoft, blue chip stock. Leave it alone. They're in the video game business, which I like because I think esports is blowing up. They have all those Microsoft applications that I use at work. This is stock you buy and you do not touch it. Just do not touch it. Appreciate the growth. Get the dividends. Boom. There you go. The next stock I got was Cisco. Cisco is really a new stock that I am very bullish on because like I said, I do look at Warren Buffett's portfolio, and I think he bought a lot of this stock just recently. And it makes sense because the way technology is booming and the way technology is being set up, these routers and communications and technology products, they're going to need routing information. They're going to need all these protocols and switches and routers and all this other stuff. They're going to need a company like Cisco to route all that, and that's pretty much what they do. I think my cable box over there that I'm looking at right now is made from Cisco. So this thing has been going up. It's been trending up. It's been on quite a run. I kind of bought them high. I just jumped in with 15 shares. A great dividend year. A blue chip stock, looks great with the reports. I think this is a really good bet here as far as a solid pick for a tech stock, and I can understand why Warren Buffett bought this stock if that's true. I think it is true. He bought a ton of shares with this stock, and he bought a ton of Apple shares, but this is a stock you buy and you don't touch. It's simple. Buy, touch, collect dividends. We're going to go to our services sector. We're just quickly going through the portfolio here. We have McDonald's. They have really, really took it into the jaw here. They have been dipping like crazy. This is an incredible buy point for McDonald's right now. Solid blue chip stock. They don't dip much. I have been collecting their dividends, and they pay a very, very exciting dividend. I think some news came out today that they lost their analysis rating or something like that. They were considered a buy, and then it dropped to like a sell or something like that. Or maybe it was a neutral. I don't remember. But, there are a lot of combinations and a lot of factors as to why McDonald's is dipping out right now. The correction, the taxation on steel and aluminum and all this other stuff that's been going on. And, guys went out. Again, they want out. They're pulling their money out, but again, they're gonna suffer in the long run because McDonald's pays a fantastic dividend. If you look at the graph here, straight up, this thing goes straight up. They dip. This is a great buying point for the 5 years. They have a good graph, a good 5-year graph. You buy this and you don't touch it. You appreciate the capital and the dividends and. This stock is not going anywhere. Everybody's not going to stop eating Big Macs. Everybody's not going to stop getting Happy Meals and all this other stuff. McDonald's is here to stay. Great services sector stock. My next stock is Pepsi. They really handle my consumer staples, and they don't grow much, but I do like their dividend yield. It's an exciting stock because they sell those snacks. I know a lot of people like Coca-Cola, ticker symbol KO, but I think that Pepsi is focusing on the healthier drinks side of things. They're focusing on healthier drinks, and Coca-Cola, they're selling all those, Sprite and Coke, those unhealthy drinks that people they're getting hip to it. People don't want to drink, Coca-Cola that'll mess up your insides and all these unhealthy drinks they're drinking. People are adapting to healthier drinks, and PepsiCo also has all those. They're in the Frito-Lay. They sell all those great snacks. I bought them really for the dividend because I know they don't grow much. I know for a 5-year chart, they really have actually a good 5-year chart. But this is buy and hold. This is the pinnacle of a consumer staple. They're buy and hold, and you don't touch it. I know Coca-Cola has a bit of a stranglehold on those drinks, but PepsiCo, they still own Pepsi, they still own Gatorade. I think a little some Gatorade, Tropicana. Great stock, great consumer staple stock. We're going to jump into the industrial sector. My Caterpillar stock, they have not been doing well thanks to the correction, but I bought this at 126, I believe, and I sold it high. And this thing kept running up, and I'm like, oh man, I should have I should have never sold, blah blah blah. And this thing kept running up, and it got up to about 170, and I was getting ready to buy it, but then I stopped, and I just said to myself, you know what, this stock is overpriced. I'm gonna wait till it gets back down to about the 150s or something like that. I did, and this stock kept going down. So that's the risk you take when you're investing. You never know about these things. You never know when you reach the bottom. And as you can see, I got 5 shares of them for a really, really terrible return of minus $59. But again, I have been collecting their dividends, and they have great earnings reports. Solid stock. This is a solid stock. This is the kind of stock you want to be holding with all the politics that's been going around about this administration, and they want to build stuff, and they want to build houses, and this is the stock that you want to be in. They pay a dividend. They have all those construction machines, and this pretty much solves my industrials as far as giving more diversification to the portfolio. And me, I told you guys, I like to buy multiple shares at once. We're going to go to NRZ, and this is just a real investment RIT, a real estate investment trust, 5 shares. I'm going to just quickly run through this. High dividend yield, a little bit risky, but like I said, I love growth and dividends. Growth and dividends is what my portfolio focuses on. Kind of dipped right here, but they have been on a tear ever since. I like them long term because they do pay a great dividend. I haven't captured their dividend yet, but they have pretty good earnings reports. Solid stock. This is a buy and hold. Should contribute to the portfolio nicely. My consumer discretionary is Home Depot. I think they are a little bit Amazon proof. But with the whole Sears going out of business, I think Home Depot they have great earnings reports. They have a great dividend yield. They have been affected by the correction, but again, and I know I'm really down on them because, like I said, I didn't say, but this stock got up to about 207, and I had sold this. I got in at $166, and I had sold this around 188. It kept going up. It got all the way up to 207. I was mad. I didn't want to buy it high. I just waited all the way until it got back down to 188 when the price point at which I sold. I bought in, and it kept dipping. Thanks to the correction, it works like that sometimes. But like I said, I've been collecting their dividends. I am more than happy to hold Home Depot for the long term. They are a great consumer discretionary stock that is, I believe in my heart, is very Amazon proof. People aren't going to stop building houses and going to places like this when they need the fixed stuff. They're not going to just keep buying off Amazon. They're going to go to the professionals, and the professionals are at Home Depot. I think the difference between Lowe's and Home Depot is that Home Depot hires veterans. They hire people, the people from older gentlemen and ladies that know the industry. And Lowe's has they kind of focus on the younger generation and trying to train them up. But Home Depot is my pick. 5 shares, great stock to me. And we're going to keep moving on down the portfolio. My communication sector, 15 stocks of them. Great dividend yield. They don't grow as much, and I know I always talked about growth and dividends is what it's all about, but for the past year they have not been growing. This is really just to capture their dividend. I'm trying to buy this as low as possible, just averaging down my shares. 15 shares for T. Great blue chip stock, great buy and hold. Boeing Airlines is the next stock. Really up on this. This is probably the best stock in my portfolio as far as percentage and return. They've really been taking a dip. They've been getting hit really bad lately with the recent news that's been coming out. But the solid graph, solid reports. I got in at 287. This you do not sell this. You do not sell this at all. You just leave it alone. And I have no plans on selling this. Pretty high portfolio diversity, but I've been collecting the dividends. I think I got paid today actually. A 5.13 dividend. And I think we saw that at the opening when I opened up the portfolio. But Boeing Airlines. This is a stock that you do not sell at all. Buy it, hold it. I think this stock is going to go up to $400 at some point. Really a great defense stock. Next stock in my portfolio is MasterCard, ticker symbol MA. Visa, I had Visa here, but I was reading an analysis report that was saying that Visa was overpriced. And then I went to MasterCard, and people were praising MasterCard for their growth. And then, they pay a sort of lousy dividend, but this stock really has tremendous growth. And I compared it to Visa, and Visa has nothing on MasterCard. I'm sorry. MasterCard is where it's at as far as my payments goes. They have an excellent graph here, and this is why I bought 3 shares of them. I had Visa. I got out of Visa, and I got into MasterCard hoping for quite the return here, and I think that they will return me a pretty good value, and just a great stock. This is another blue chip stock. All my stocks in my portfolio either have great market cap or they are a blue chip stock. Buy and hold, don't touch it. Procter Gamble. As you can see, I got into them on a great dip. This is a dividend aristocrat. They pay a solid dividend. I think it's like 69 cents, but blue chip stock. Buy, hold, don't touch it. Solid earnings reports. They've been on a dip recently. I think I bought them somewhere down in this range. Great buy. I think that this is going to do very well for my portfolio as far as growth and contributing those dividends. We're going to jump into JPMorgan Chase. I bought them today. I actually have Bank of America here, but JPMorgan Chase is the most popular bank in the world. It's not even close. They are fairly undervalued right now. I would expect this bank to be a little bit more than $113, but I bought them. I actually got into them at around 95. I sold it high, and then I jumped back into them at around 111. That turned out to be a great play because I ended up getting 3 shares for a total return of $6. So, this is another blue chip stock that just keeps trending up and should be doing well for the next 4 years. Thanks to the growth in this administration. So, great stock. Great blue chip stock. Buy and hold. You never touch it. Next, FPL Energy. This is the last stock in my portfolio. It is a utility stock. I didn't really do much research on them. The only thing I know is that I was looking at their earnings reports. It's somewhat solid. I know they missed the fourth quarter there, but they paid a really, really good dividend that I could not turn down. Solid PE ratio of about 13%. Market cap looks good. I'm kind of down on them, but they don't dip much. I look at the graph. There's barely any dips here. The graph looks solid. I know from the yearly graph, kind of dipped right here, but like I say, everything dipped right here thanks to the correction. This is a trending up graph. From what I know about them, they provide electricity, especially to certain areas in Florida. But this is a great utility stock. This is probably one of the better utility stocks on the market. So that will complete my $7,000 portfolio. And I do have Robinhood Gold. I just wanted to mention that I do have Robinhood Gold, but I do not recommend Robinhood Gold to anybody unless they actually know what they're doing, because Robinhood Gold, you trade on the margin, and that is very risky when you trade on the margin and you end up losing pretty much all the margin and get a margin call where you have to pay back the money that you lost, either that or they liquidate your stocks. So I do not recommend jumping into Robinhood Gold unless you actually know what you're doing, and Like I said, I feel like I know what I'm doing now, especially being in the market for so long and investing into the right combination of blue chips, dividends, and growth. And I think this is about a 16 stock portfolio. I like to be around 15 stocks. I don't like to go past 15 stocks, but I think that with this amount of diversification and just everything just pulling its own weight and paying dividends, this is the right way to go. So I'm going to end it here, and thanks for watching.